Well, here we are again this September 2025, marking the next evolution of Toronto real estate, the fall market, where we see another pickup of activity now that the summer's over and we're back to our more regular routines with kids back at school. The fall market tends to be a less active market than the spring market for a few reasons. For one, it's the start of the school year and few parents want to interrupt their kids' schooling to do a move, instead opting to buy and sell in the spring and move in the summer. It's also a shorter season than the spring market. It's only about 2 months long, running from mid-September to about late November before the Christmas season kicks in and real estate once again goes on the back burner. While in contrast, the spring market sees a lot of build-up after the new year and lasts 4 to 5 months long before people go on summer vacation. And the third reason is the market vibes just generally tend to be more conservative. Unless there's positive market momentum or buyer optimism driving things, the fall market peaks are lower, and with fewer buyers that are for sure transacting, this tends to keep the market more suppressed. Though we did see an overall stronger summer market this past July and August, with sales transactions in the city up about 7.5% year over year, to date, the Toronto real estate market is seeing its slowest year in almost 30 years. We finished August with only 15,581 transactions for the year, narrowly beating out 1996, which was the official slowest year, beating it by only 350 sales. As a comparator, 2021 January to August saw 30,410 sales transactions, so nearly double what we saw this year. So the market is experiencing some serious whiplash compared to our COVID highs. Currently, we do have high levels of inventory in both the condo and freehold sides, with nearly 5 months of inventory, putting us firmly in buyer market territory. In the shorter term, I do have some slight optimism. I've said this many times in previous market videos, and I'm saying it again. We're on year 4 of being under the 30-year average of sales transactions for the city, so there is a very large cohort of buyers who want to move and need to move, but for some reason or another have not moved. For sure, the continued poor performance of the condo market is largely driving that, and I don't expect a turnaround of that market for probably at least another year. But with the exceptionally weak Canadian job numbers report that recently came out, economists and investors in the bond market are now thinking that rate cuts are back on the table and much more likely to happen on September 17th when the Bank of Canada meets next. With inflation dropping slightly in July to 1.7%, and with weak US job numbers also stoking rumors of a rate cut south of the border, I think a rate cut is a legitimate possibility. And not that a 0.25% rate cut changes much of the math in homeownership, but it could bring some confidence and excitement back into the market for home buyers. If those buyers sitting on the sidelines decide to jump back in, we could see a stronger finish to the year. My other observation that is driving my slight optimism is even though some sort of trade or tariff deal with the US doesn't seem imminent or even legitimately in the works, I'm noticing in the news cycle that media and even much of the US seem to largely be turning on Donald Trump, tuning out his threats and his huffing, so his ability to swing market sentiments seem to have diminished. No doubt his threats have become much more hollow with lack of follow-through. Wall Street even coined a term calling him Taco, standing for Trump always chickens out. And very recently, there seems to also be some health rumors on President Trump, with one viral tweet even saying that he had died, and it was practically not addressed by the president. All this to say that the markets seem to be more comfortable with tuning out the president's threats, which might give potential buyers some reprieve and reassurance they need to do the move that they want to do. Still, longer term, there are some pretty concerning indicators that the real estate market will have more room to fall yet. First is the increasing number of power of sale homes. I've noticed a rise in listings being under power of sale. I did a very high level search of listings with power of sale written in the broker's remarks for houses and condos in the GTA. This won't be a complete list of all power of sale listings, as many listings won't have those words in the remarks, especially if they're being sold by a private mortgager. But based on the simple search, We've already surpassed 2024 power of sale listings with 4 months still left on the market. And with yet another $400 billion of mortgage renewals across Canada to come in 2026, many for properties purchased at the peak of the market in 2021. And of course, with our bad job numbers, seeing even more power of sale listings is to be expected. It takes a minimum of 3 to 6 months from a homeowner defaulting on their mortgage payments to the banks reclaiming and selling the homes under power of sale on the MLS. So anything you see that is on the market today under power of sale was initiated in the spring at the latest. And there are still many more people who have since lost their jobs and are just starting to miss their mortgage payments. So expect more to come. The other really bad indicator is dropping rents. Days on market for condo rentals are very high, and average rent prices are dropping, and larger apartment buildings are giving away as many as 3 months of rent for a 1-year lease. I'm seeing it firsthand. A couple rental units for repeat landlord clients that I've listed in the past, which used to rent out really quickly, like within 1 to 2 weeks, are now barely getting any showings. And they're over a month on the market, and we're now having to drop rent prices to 2019 levels. People don't often look at the correlation between the rental and buying market, but this is a big indicator that the housing market is contracting and that there is a diminishing need for housing in Toronto, at least at the prices that are offered on the market today. Essentially, the demand for housing in Toronto in all forms is dropping, which overall is a leading indicator that prices have more room to fall yet. The market is constantly shifting, and while short-term bumps are always possible, the bigger picture still points to some challenges ahead. My view is we'll likely need another year before we see a meaningful turnaround in Toronto real estate. So that's it for me this month. If you found this video informative, I would appreciate a like and a subscribe. If you want to connect on real estate, you can click on the Calendly link below. Thanks for watching, and I'll see you guys next time. Cheers.